TechMinder reports an in-line set of numbers in the second quarter manages to maintain their margin guidance despite wage hikes. The management says that the higher margin of around 14% by the end of FY23.
Sun Pharma's rally continues. The stock is higher by 2% after a better than expected set of second quarter numbers. Brokerages too remain bullish, although Goldman Sachs has issued a sell call, says intensifying industry-wide US price erosion will impact the company.
Varun Beverages rallies after reporting a strong set of numbers in the second quarter. The management remains confident that higher consumption in the fourth quarter fueled by festive season.
Karnataka Bank hits a 20% upper circuit after a stellar quarter. Net interest margin hits a 20-quarter high of 3.56%, while balance sheet stress too reduces. Profit grows over 200% in the quarter gone by.
LIC Housing Finance reports a weak quarter in the second quarter. The NIMs decline by over 27%. Chambal Fertilizers as well tanks after the margins contract by 100 basis points, while profitability falls by 45 basis points. Well, hello and welcome to Chartbusters. I'm Nigel D'Souza, and joining me today is Ekta Batra. Well, Ekta, markets, in wait-and-watch mode, it seems. We have the big Q that comes out later tonight when the Fed comes out with their policy decision, which should be 75 basis points. That's something the market has already digested. But what will they say with regard to the future outlook on rate hikes? That's something that we'll be tracking closely. For the time being, though, the Nifty Bank holding mildly in the green, and the breadth of the market as well in favor of the number of stocks that are advancing. More number of stocks advancing than declining as we speak.
Yes, absolutely, Nigel. And there are a lot of stocks within the broader markets, and really healthcare stands out to me. Yesterday, it was Divi's Labs, which was gaining around 4 to 5%. And today, we have Sun Pharma, which is really going from strength to strength. In fact, it's the top gain on the Nifty as we speak. It's up around 3%. And if you look at it, it's really a ranked outperformer within the entire pharmaceutical space. It's given returns of around 26 to 27% on a year-to-date basis. Dr. Reddy's too is up around 2% at this point in time, so doing well for Dr. Reddy's, and Divi's Labs too building on gains from yesterday. So that stock, which is already rallied around 9% at current reckoning on a week-to-date basis, has gained another 2% at this point in time. But it's not just limited to pharmaceuticals. Hindalco, case in point, is doing well today from the entire metal space. That stock is up 2.5%. Tata Steel is seeing a little bit of a comeback today, so that stock is up around 1% at this point. But now let's cut across to the Prime Minister, who is speaking virtually at the inaugural address for the Karnataka Global Investor Meet 2022.
Welcome to India. Welcome to Namma Karnataka. And welcome to Namma Bengaluru. कल कर्नाटका ने राज्योत्सव दिवस मनाया। कर्नाटक के लोगों और कन्नड़ भाषा को अपने जीवन का हिस्सा बनाने वाले सभी लोगों को मैं बहुत बहुत बधाई देता हूं। ये वो जगह है जहां ट्रेडिशन भी है और टेक्नोलॉजी भी है। ये वो जगह है जहां हर तरफ नेचर और कल्चर उसका अद्भुत संगम दिखता है। ये वो जगह है जिसकी पहचान वंडरफुल आर्किटेक्चर से भी है और वाइब्रेंट स्टार्टअप से भी है। जब भी टैलेंट और टेक्नोलॉजी की बात आती है तो दिमाग में जो नाम सबसे पहले आता है वो है ब्रांड बेंगलुरु। और ये नाम सिर्फ भारत में नहीं बल्कि पूरी दुनिया में एस्टैब्लिश हो चुका है। कर्नाटका की ये धरती सबसे खूबसूरत नेचुरल हॉटस्पॉट्स के लिए जानी जाती है। यानी कि मृदु भाषा कन्नड़ा, यहां की समृद्ध संस्कृति और हर किसी के लिए कन्नड़िया लोगों का अपनापन सबका दिल जीत लेते हैं। साथियों, मुझे खुशी है कि ग्लोबल इन्वेस्टर्स मीट का आयोजन कर्नाटका में हो रहा है। ये आयोजन कॉम्पिटिटिव और कोऑपरेटिव फेडरलिज्म का सटीक उदाहरण है। भारत में मैन्युफैक्चरिंग और प्रोफेशनल और प्रोडक्शन काफी हद तक राज्यों के नीति निर्णयों पर, नियंत्रण पर बहुत निर्भर होता है।
All right, well, we'll keep getting snippets from that Invest Karnataka 2022 meet out there for global investors. For the time being, let's get back to markets. And one stock that's getting a hard knock today is LIC Housing Finance. It delivered a lackluster set of numbers in quarter two. It was a sequentially weak quarter for the company. Net interest income slid by close to 30%. Let's bring in their MD and CEO, Mr. Y. Vishwanatha Goud, to understand what weighed on the performance in the past quarter. Hi, sir. Thanks so much for joining in. Well, you surprised everyone on the downside, but your commentary is going to be even more important now. Your NIMs came down, sir, by around 60-70 basis points on a sequential basis, though your cost of borrowing went up by only around 30 basis points on a sequential basis. What is the steady state NIMs we should be working with, and why was there such a sharp contraction in the past quarter?
If you look at what we call the Q2 performance overall, actually our disbursements are very good on higher side. Disbursement was very robust also, even quarter over quarter, even compared to last year. Apart from that, what happened, the cost of borrowings, of course, have gone up. That is across the industry. Along with that, we do have to pay. That is there on our borrowings. Then if you look at the loan book size also, there is an expansion on the total portfolio also. Then over a period of last year, if you see what is called the cost of actually funds also have gone up. Then the net interest margin.
Yeah. Mr. Goud? Yeah, you know, Mr. Goud, with regard to the disbursements and the loan growth, we'll get to that in just a bit. I think you were getting to the NIMs part. So tell us why the NIMs disappointed in the past quarter. Cost of borrowings has gone up for the industry, yes. The problem is, it's likely to stay elevated. So what is the guidance you want to give us with NIMs? Go ahead.
As far as the NIMs are concerned, we are very confident that in the quarters to come, there will be definitely an improvement beyond what we are now have planned also. Then across what you call the loan book size also now what you call the interest rates will be passed on in the Q3. What are the rate hike is there that we definitely will be getting effect into that. With that, the net interest income will have good margin. Then what we have guided earlier also, it will be more than 2% across also, even NIMs will work out. And we are having very good systems in place. Even the digital journey is also now in a very big lead with all the processes kept in place. And we are very confident that the coming 2 quarters will be having very stellar performance.
Okay. NIMs will improve to 2%, sir. I just want to clear that number.
Which one, sir?
NIMs will improve to 2%, you're saying, for the coming 2 quarters?
No, NIMs will go up. Now, for the time being, it is hovering around. Actually, earlier it was around 2% to 2.3% range was there.
Yeah.
Now, for the half year, it will be around more than 2.1%. So it will be around same percentage will maintain more or less. Or it may go up to 2.3%.
Okay. Your overall credit costs have remained elevated this quarter, sir. Just give us a sense in terms of what the write-offs were this quarter. What are you guiding for?
As the write-offs are concerned, only a small portion was taken care, around 100 crores plus. Then actually now the NPA portion also slightly better compared to the earlier quarters. There are some reduction also in the total volumes. Then going forward, both in the developer book and also as well as the individual loan book, we will have very good improvement in our NPAs. And we're very sure that the credit cost will be around 45 to 50 basis points annualized. That's what we are looking at.
Okay, so credit cost will be 45 to 50 basis points. I just want to, break up a little more in terms of the asset quality when it comes to your developer loan book. What was it this quarter as compared to the previous quarter? And similarly for the individual segment as well. What are you guiding for?
Developer book, if you see, actually there was a contraction, I agree, because after pandemic there was slowdown. Then again, slowly, our loan book says also in the developer front was not that much earlier. It was less than 5%. But what happened now, of course, in this quarter, there's a small contraction. One plus point is now we are also focusing our business operations in the project finance across the country in all areas. So we are very sure that there will be a growth again than the earlier years, even in the disbursements in the developer book also. Then I think now the stage 3 has got reduced by 800 crores in the retail as of now. Then again, if you look at the builder loan also, it has contracted by 700 crores over.
Okay, all right, Mr. Gowda, we have got your credit cost guidance, 45 to around 50 bips odd. What about asset quality? Your gross NPAs were around 4.9% in the past quarter. Yeah. And I think net NPAs calculated is around 2.8%. So what's the guidance on that front? Give us a sense on the asset quality. And also you have been talking about loan growth, right? What are you guiding for in FY23?
Yes, as far as the GNPA levels are concerned, certainly there will be an improvement from this stage. It is slightly compared to earlier quarter, it has come down by a few basis points. Then going forward here, with all the systems in place and teams working across, we are very sure that the GNPA position will certainly improve quarter after quarter. And at the end of the year, I think it will be far, far better than in the earlier quarter, certainly. Okay. Both in retail as well as developer book.
Okay.
And then...
Go ahead, sir.
Go ahead, sir.
Then looking at the other, what you call...
loan book, sir. Loan growth. Go ahead.
Yeah, loan book growth. Loan book growth is concerned now, we are very optimistic that the growth is around 15%. Then in the coming 2 quarters also, the demand is robust. And we are very sure and confident that we will be showing a growth of minimum 15% for the whole year.
Sir, just a quick last question before we wrap this up. What has, probably disappointed the street is the kind of decline that we've seen on a Q-on-Q basis when it comes to the NII as well as the profitability. So do you have visibility to guide us about just Q3, that whether or not there is going to be a sequential stability in the numbers or a recovery when we talk about LIC Housing Finance when they probably report Q3? What are the trends that you're seeing at this point?
Yes. Actually, coming quarter, the Q3, we are very optimistic with all the targets set for the people down the line for both our disbursements and also the recovery. I am very sure that the results for the Q3 should be far, far better than the current one on all fronts. Then especially if you look at what you call now, even the benefit, what you are repriced for the entire loan book is also effective from the first quarter, normally because we take the quarterly reset. So with that, this quarter, we should have very good income, and also the NPA levels will be coming down. With this, the Q3 should be far, far the best quarter in the entire year.
Oh, okay. All right. So we're going to leave it on that note. Thanks very much for joining in and speaking with us. I'm sure we'll probably touch base with you as the quarter goes on. So LIC Housing Finance, confident about a Q-on-Q recovery in terms of numbers. As of today, disappointment. The stock is down around 10% reacting to what has been a disappointment in terms of the NII, which is down around close to 30% on a Q-on-Q basis. OPEX is higher, net interest margins lower this quarter. Take a short break. On the other side, a detailed chat with the management of UPL. Welcome back. Well, let's get talking about a couple of more frontline numbers. UPL reported Q2 earnings yesterday. It was a big beat on margins aided by higher gross margins. Management has also reiterated their FY23 guidance for revenue and EBITDA growth of 12 to 15 and 15 to 18% respectively. Our colleague Sonal Bhutra got in touch with the global CEO Jay Shroff and Mike Frank, the CEO of Global Corp Protection Business at UPL, to get a fine print of the quarter gone by. And she began by asking him why the volumes declined in the second quarter. Listen in.
Generally, the team has been focusing on improved realization and improved profitability. And with the erratic, weather patterns, we have been focusing on making sure that we are not overstocking the channel. With the decline in some of the raw material costs we are seeing, we see that, we are still going to deliver good numbers. And, we are going to continue to grow the business. But this is a period where we are just tightening, and with the interest rate curves increasing, We are focusing on tightening the credit in the business and just focusing on cash. Therefore, we are just managing the business much more tightly.
Okay. Take your point. Mr. Frank, let me come across to you on this one. Strong margin expansion, and this is in a time when we are talking that inflation was still high in Q2. What led to this expansion on a YOY basis for you? And 22%, is that maintainable for FY23?
Yeah, so we had very strong growth, as you said, really on the heels of pricing actions. Of course, raw materials have increased on a year-over-year basis, and we've been able to price into that inflationary market, really focusing on our high-value, high-margin products. And as Jay just mentioned, really working to time our product sales into the channel and into growers' hands, close to when they need them. And so we did see a bit of a shift in volume that we'll see play out in Q3 for us. But our margins, we expect to be strong throughout the year. And so this was a very nice growth from a margin perspective. And we would expect to see margins continue to be strong through the year.
Okay, that is good to know. So, Mr. Shroff, in that case, I wanted to speak to you in detail about some of the geographies, especially Europe. It was expected to be weak, 1%. Still, there is a 1% growth for you here. What is the outlook generally for your company, for the agrochemical players here in this case? Are you seeing any improvement in that particular market? What is it when it comes to competition? Or Europe plus one theme is something which is benefiting players like yourself?
I'll leave Mike to answer that in detail, but in general, let me just say that, the weather in Europe has been particularly dry this year. In spite of the fact that commodity prices are strong and farmers generally tend to use more products. But this was probably the driest summer in 500 years in Europe. So, this has caused a lot of challenges for the farmers. But even in spite of that, I believe that our team is doing phenomenally well. But I'll let Mike answer that.
Yeah, generally our portfolio performed very well in Europe. If you look at it in euro terms, we're up about 15% on the quarter. Obviously, with the euro devaluation in INR, we're up 1%. And as Jay said, based on the impacts of climate change and the challenges that farmers experienced across Europe this year, our portfolio and our teams performed very well.
Okay, so going by whatever you told me that, okay, of course, Europe had that impact of extreme weather conditions. There was euro depreciation as well. Generally, what is the outlook in terms of volumes once this stocking issues go away, once you see second half changing versus the first half? Of course, it was a strong performance then as well. But what is generally the volume outlook for the second half, Mr. Shroff?
No, I mean, we continue to forecast 12 to 15% growth for the year. We feel quite comfortable that, the farmers are going to continue to invest in better technologies, sustainable technologies. Our whole portfolio in all these sectors is well positioned to benefit from all the, climate-related impact and also the strong demand for food and generally the impact of having globally a very erratic weather system in the last year. So we believe that food prices will be strong and UPL will continue to lead, growth across everywhere.
All right. Well, that's the management of UPL sounding rather optimistic about times from here on, and they've stuck to their guidance, good growth or margins, as well as guiding for $650 million of debt reduction for the rest of this year. Well, we'll slip into a short break. You come back. We'll continue our focus on markets and stocks that are moving around. The markets are down closer around 30 points odd, and a couple of stocks. And Tech Mahindra was up closer around 2.5% odd earlier today. That's come off a little bit. It's almost moved into the red, so keep an eye out on that one. Asian Paints as well has moved a little bit lower in the last few minutes, moved into the red from the green. So keep an eye out on a couple of them. But it's a good time to shift focus to our special segment where we get you a few ideas for profit from Money Control Pro. Khushbu joins in to tell us about a stock that she's tracking closely. Khushbu?
Mahindra Finance is a market leader in tractor and utility vehicle segment. with a deep penetration into the rural market. The company is driving its transformation agenda by adding new verticals and embracing technology to complement and strengthen its core business. It has put up a roadmap aiming to improve asset under management, cost ratios, and stabilize asset quality and net interest margin in order to achieve a higher return on asset. The company is changing its customer mix by increasing non-vehicle share and going digital. On the earnings front, strong signs of recovery have been witnessed in the auto and tractor segments post-COVID, which led to robust disbursement growth in the previous quarters, and the momentum continues. As the inventory level rises, we see an uptick in advances to be fueled by both used and new vehicles. Mahindra Finance is a long-term growth story, and the current valuation at 1.4 times FY24 adjusted book looks very reasonable.
Okay, so that's the view, or that's a quick update coming in from Money Control Pro. But on that note, we need to wrap up on Chartbusters. But stay tuned. We have a very special conversation coming up in the next 30 odd minutes with Rhythm Desai of Morgan Stanley. Stay tuned.